good afternoon, everybody. David Brown, Sierra Pacific Mortgage. Thank you so much for having me.
Thank you for being here, sir.
Thank you, Dustin. I have my processor of the year, Jessica Williams, with me. Processor of every year. She's going to do some video work in conjunction here for the SOCH. But thought we'd talk a little bit about a couple things that are going to be big in 2025, and then more importantly, I want to talk to you guys about what y'all talk about. I want to hear about what's on your mind, what you're seeing, and we can have some good back and forth. So make it fun. So the topic of this today is affordable lending in 2025. I think we all can agree that interest rates being up and prices still being kind of elevated make it really difficult for buyers to get into houses. And so whether they're first-time home buyers or even people who want to move up in housing, affordability is a major topic that we're seeing and hearing about. I think the desire is there for a lot of people who want to own. They want to get out of the rentals, or they want to or move up. But then when they look at what a monthly payment is going to be on even a modest-priced house, there's a lot of heartburn there, or assumptions around down payment requirements. How much money I've got to have out of pocket to get in this house. And so I thought we'd talk a little bit about some solutions we're seeing, some new things this year, some things we're bringing on to our company that I think are pretty unique too. So THDA is one program that we continue to do a lot of. Anyone heard of THDA? Yeah, familiar with how that works? So THDA is not a loan in and of itself. It is and it's not. THDA is the state housing development authority that provides financing, down payment assistance financing that's coupled with a first mortgage. And so that first mortgage could be a conventional loan, it could be an FHA loan, it could be a USDA loan. So we're simply taking a loan, a first mortgage, we're going to couple with that the THDA down payment assistance. He's got a question. So up until this point, we've been able to do government loans with THDA, and then we're as of next month in March, we're going to roll out our ability to couple a conventional loan with THDA. So when you're writing up a contract, I think that makes a difference where you can say, hey, we've got a conventional buyer versus an FHA buyer. Mm-hmm. Maybe it shouldn't be that way, but let's be real. Sellers often see a conventional buyer as being stronger, or maybe less likely to fall out, maybe because of the property condition, things like that.
Yep.
So next month we'll have conventional with THDA in addition to FHA, USDA. But just a great way to bridge that gap, that 3%, that 3.5%, or that 5%, whatever the down payment is required to supplement their down payment, and even closing costs. So a borrower could use a USDA loan, which is 100%, get that 5%, or is it $6,000? I think.
6,000.
You either do 5% or 6,000. Could cover all the closing costs. So a lot of ways to skin it. Everyone's situation is different. So what we do is just try to make sense of what the borrower situation is, and then find a solution to meet that. So it might mean getting some seller paid closing costs. We have a THDA buyer right now that just wanted a contract on a double wide that is. It's going to be an FHA loan on the double wide, and we're going to do the down payment assistance. They're also getting some closing costs, so that they're going to have to come with essentially no money out of their pocket. We have another one right now, Jessica, where the buyer is actually going to get part of their earnest money back at closing. So they're going to get $500 back at closing, and that was closing, I think, Tuesday. So
Why is
another. So they got enough closing costs from the seller that is covering all their closing costs with the down payment assistance, and they put $1,000 in earnest money down. So they're going to get $500 of that back essentially. So just trying to look at different ways to help people into houses. That particular buyer has been renting that place for 11 years. So landlord says, hey, time for me to sell. I'll sell it to you at this price. Unfortunately, their payment's going to go up, but they're going to own it now. They're going to have equity moving forward, and he is giving a little bit of a deal on the price. So,
what are the What are the requirements for THDA?
So THDA, you're gonna have to have a 640 credit score. Your back-end debt-to-income ratio, so your total debt-to-income ratio with all your other debts plus the housing has got to be 45% or less. So it's a little more restrictive than FHA. FHA will let you go to what, 56%. Conventional generally around 50%. So a little more constrictive there, but it's also a little less than say USDA, where USDA we generally need to see that under 43 to 45%. So and the front end ratio on USDA is a little more constricted too. So let's see, they do have to be a first time home buyer. They have to go through the home counseling class, which is an online thing that can bang out in an hour. So am I missing anything there, Jessica? Nothing. These are the basic requirements. They'll generally go by what's called AUS results, automated underwriting results for FHA's requirements. If they qualify for FHA financing, they're very likely going to qualify for THDA as long as it fits those parameters with the ratios and whatnot. So that's THDA. We're actually partnering with a new company, and it's live now, where we have a down payment assistance program without any kind of geographic constrictions or income restrictions. So THDA, yes.
How does that work?
So how does that work? So THDA by county in Tennessee, you can't make more than a certain amount of money per year.
Okay.
Yeah. So THDA, if you're a 3+ person household in Washington County, we just found this out. It's $107,000 some odd dollars per year is the max income.
$400,000 purchase price max.
Is it $400,000
Yeah,
now?
everything in Tennessee is a $400,000 max purchase price.
Okay.
Yeah.
Yep. So there's this other program we're rolling out doesn't have those restrictions. So I think it's up to conforming, and I've got some literature here on it. I think the conforming loan limit is the max, or maybe 7 something. But the big thing is no income restriction. So you've got a first-time home buyer that has great income, but they have nothing to put down. They can get a 3.5% down payment assistance that's forgivable. So after 5 years, they make the payments on time. That is a forgivable amount. And then if they need more than 3.5%, maybe to cover some closing costs, they can get 5% that's paid back over, I think, a 10-year period, I believe. So that's another way that we can help people get into home without any money down. So pretty cool. We're still, still early for us using that program, but THDA oftentimes the barrier is their income, or that it's not Tennessee, maybe it's Virginia or somewhere else. So, any questions on that?
I don't think so.
USDA continues to be another big one that we love to do if it's in the county or rural development. Let's see, down payment assistance. Yeah. The temporary buy downs are still a big topic, I think, right now. I think we're still in a rate environment where we're going to see rates come down. It's been slower to happen than we thought.
Are you seeing any of those?
Some, yeah.
What is a temporary buy down?
A temporary buy down is generally you have 3, 2, or 1 where you get a better rate the first 2 to 3 years, and then it reverts to what the rate would be as if you didn't have that. So let's say the 30-year fix is 7% right now. The first on a 2-1 buy down, the first year it would be 2% better. The second year 1% better, and then it goes to the 7%. So
Unless you can refinance in between.
yeah.
So you do have that option. It's not locked in.
You're not locked in for the 2 years. So that buy down cost is paid usually by the seller. That actually goes into escrow with the mortgage company. And so if you pay it off within that first 2 years, or you refinance or sell the house, whatever's left in that gets applied to the principal of the loan. So you don't lose it. So I think the biggest challenge to doing more of those right now is just realtors don't understand it, generally speaking. But it's very simple. It's that we have this spreadsheet that you put. There's 3 variables, literally just 3 things: the loan amount, the rate, and the term. I think. And then the spreadsheet does the rest. It tells you what the cost is, how much the monthly payment savings you have the first 2 years. So it's and I can email that to you guys if you want.
That'd be great.
I think I have before, but I can send it again. But very simple, easy to use. You know, another thing having to do with affordability, where hey, you know, rate has such a big impact on payment. You know, so if you can go from 7 to a 5, you know, all the
It's a
better.
huge difference.
Yeah. So, what other kind of questions y'all have? So the other thing, I'm just going off my memory because my notes are in my car. Home affordability. So, the home affordability, we've got the DPA, the down payment assistance. We've got you'll hear this, continue to hear this, non-QM, so non-qualifying mortgage
Yeah.
loan programs. Huge in our industry right now. You know, plenty of folks who have cash, they've got down payment, but they can't show income on their tax returns, or they, you know, have a lot. They're self-employed. They write off everything.
Like
You all-
mafia bosses.
like these realtors out here, mafia bosses, yes. You know, the Al Capones, right? So, you know, being able to get them financing based on bank statements, you know, showing systematic deposits in their bank statements over the last, you know, sometimes 12 months required, some 24 months. You know, for a lot of businesses can show that, they just can't show qualifying income on their tax returns. So, you know, as you're talking to your self-employed borrowers right now, they need to be talking to their accountants about how they're structuring that tax return, how they're writing off expenses, and if you have someone that's wanting to buy, they need to be having that conversation with their accountant right now as they're preparing their taxes for last year.
Or
Same.
refinance too.
Or refinance, yeah. Investors, same kind of thing. You know, you got a lot of investors who may be self-employed business owners. They can't, you know, they've run into debt to income ratio issues with bringing on more properties. You know, in the non-QM world, we've got the DSCR loans, which are huge. I think more people need to know about them because it gives that investor the opportunity to build their portfolio without having debt to income ratio constraints. So, you know, they could have, you know, depending on the investor, you know, lots of, you know, properties before they run into problems there. So the biggest barriers there are just credit score. They've got to have a down payment, so they've got to usually have 20 to 25%, which isn't easy, but for a seasoned investor, they can have that. And qualifying collateral, meaning that the appraiser is going to assign a market rent to that value.
Correct.
To that house, and that market rent is going to be used to determine the debt service coverage. So we look at the principal, interest, taxes, insurance compared to that market rent, and if it's 1-to-1 or better, or even less than 1-to-1, it can be eligible for DSCR financing. So, which is kind of crazy to think about. You've got a $2,500 rental with a payment of $2,500. And still can get financing on that.
Mm-hmm.
You think there'd have to be some margin there? Like if I worked in commercial lending for 7 years, and most of the banks I worked for would have a 1.25 to 1.3 coverage requirement. So they want that extra margin there in the event they have a dip in income or elevated expenses. And so now you pay a little higher on the rate. But right now what we're seeing in investment property is the rates are very comparable to, and even the non-QM, very comparable to just normal Fannie and Freddie pricing. So that's unique. Usually you see a pretty big gap there, but investors pricing is much better than we normally see. So any questions on that? We love working with investors.
No, I do have a question on, go ahead, Dustin.
No, I didn't hear what he said that last part.
Oh,
Go ahead.
working with investors?
We love working with investors.
So I've won a couple deals with my closing costs getting covered by raising the purchase price and haven't had any issues with appraisal, but have you seen that at all with an appraisal issue, depending on like a cap of how much the closing costs were?
That's a good question. So, do we see issues where you raise the price to cover closing costs and then not appraising? While we're talking about investments, so if you have an investor, if it's conforming, they're limited to 2%.
Okay.
So the seller can't pay more than 2% towards their closing costs if it's a rental property they're buying. Not really, though, to answer your question. It could happen. We have one right now where they bumped the price up $11,000 to cover. It's going to have to be $10,800 because 3% is the limit when we put less than 10% down. And we'll see how that turns out.
Okay.
But I haven't really had appraisal issues for that reason that I've seen. And maybe because a lot of the stuff we see, there's been price reductions or they're getting it under contract less than what the list price is, and so that might help from just the optics of, hey, we're still getting it maybe less than what list price is.
Okay.
That might have some bearing there.
With the closing cost because of the net, because of what you're actually selling it for?
Yeah. So let's say there's been a price reduction, or they're able to get it for less, or they're able to get it for less than asking, and then they go back up. So they're still kind of less than list price. Does that make sense?
Oh yeah, that does. Yeah.
Yeah, so maybe just the optics of that looks like, well, they're getting less than list price. So, but even still, I mean, there's a lot of stuff that's the per square foot is pretty low, and therefore, the one out in Gray we just did, Sulphur Springs, that house appraised for more. They had tons of price reductions, and then ended up appraising more. So I don't know, it's just case by case, I guess. So.
Okay.
Yeah, but no, we have good appraisal partners. On that topic, I like that segue. There's news 2 days ago on the 24th. Freddie Mac, their head of Fannie, is now allowing property inspection waivers or appraisal waivers to happen up to 90% on primary residence.
So is that saying if it doesn't meet appraisal price?
That's saying that if the borrower's putting at least 10% down and their credit score is a certain threshold, I'm not sure what that number is, then they may get an appraisal waiver. Whereas before it had to be at least 20% down before you even had a shot.
They just changed it to 10, not 90-10.
Yeah. So it's all through the automated underwriting system. So sometimes you get them, sometimes you don't. If it's in a more rural area, you're probably more unlikely to get a waiver. But if it's in a more densely populated area where there's been more recent sales to support it, I don't know what all the algorithms are, how they come up with that, but there's some kind of way through Fannie and Freddie's automated system where they can determine that, value's good, or no, we need an appraisal. So
Okay.
and then you can do too second homes, investment. Second homes and primary, and even on the cash out refi now you can up to a certain loan to value. So just more, appraise. Glad Danny's not here, but our appraiser. Appraisal, the automated appraising and is getting smarter all the time. I mean, there's just more data out there. So the need for appraisals we're just seeing go down, but there'll probably always be some kind of place for them.
When Danny's not here, I don't have to worry about protecting the button on my desk.
Yeah, right.
Security
Yeah,
button.
no alarms getting set today. Yeah, so that's all I got. What other questions?
Do you guys have anything that comes up with like a septic permit? I have a buyer who works at a bank and has been there for 20 some years, and she has at some point been higher up as far as like mortgages and stuff. But she's heavily and she's paying cash, so it doesn't know why it matters. But she's very stuck on if a house is not hurt for the certain amount of bedrooms, or there's no permit for it. And most of the time, like, you go into TDEC and you put in information, and most of the time it's like no records found, and which sucks. But then, like, I call around, but I'm like, most houses I've come across either have no records of like septic layout, septic permit, perk, or whatever. And she's like, how are these people getting financed? How do all this stuff? So, you guys ever come across like, how does that even matter? Like,
We hear about it more from realtors than
yeah.
say appraisals.
Yeah, I've maybe had to deal with one or two of those, you know, where the appraiser said that maybe the septic wasn't enough for the house or something like that.
Right.
Not many.
It's a rare
Yeah.
occurrence, rare. But
What?
you did. But I remember there was a time a year or two ago where that was a thing. It seemed to be a bubbling topic that a lot of people were talking about. Like, oh, there's not enough bed.
Yeah,
it's not
like
perked
it's
for enough
perked for
bedrooms.
one bedroom,
Yeah.
there's 3 bedrooms. But I think the more you get educated on it, and just the more that you're here in Tennessee, like, you understand more about septic tanks, and if it ain't broke, don't fix it. And and more so the fact that, like, if you're one person living in a 3-bedroom house, is that gonna really matter? No. So it's just like logistically, and people that are just like very by the book, they're like, you know, and which I understand where they're coming from too, as far as, you know,
It's good to have the evidence.
Resale,
yes,
sure, yeah.
resell the
Yeah.
evidence and all of that. So I get
Yeah.
that, but you know,
Can I put
Yeah.
my 2 cents
Yes,
on
please.
all that? So, I would say the biggest advice that I would give to a buyer who, number one, the tile can't be found. The most important thing that they really need to know is where the septic tank is located and how many gallons it holds. And they can have a
Absolutely.
septic inspection they can have
Yeah.
a professional come out, they can snake the drains,
Yeah.
they can figure out exactly where it is. And so typically, a lot of those files have been lost anyway when they move digitally.
yeah,
So I tell people all the time, it's not necessarily something to be concerned about, because as long as you know how many gallons your tank holds and where it's located, you can continue maintenance on it. You can also have the state come out and issue a new permit or inspect it, and it's called like a re-inspection.
yeah,
Sometimes you can get the seller to pay for that, they just have to.
It's like $200.
Yeah, it's a few $100s, but they just have to put this online thing in with the state. And the state will actually go out, re-inspect
How
it,
long
and
does that
issue a
take?
re-inspected permit. Not that long, but it depends on what county it is, because it's split up by counties. The other thing I would say with that is that you can also, if it really is a problem with it being parked for the wrong amount of bedrooms, you could have them expand the drain lines
right,
in the front of the property, which you could negotiate, which is a few $1,000s. But I would say I would say the first 2 options would be, you know, just tell them,
I can
figure
get
out.
drain lines for half
yeah.
that.
yeah.
Yeah,
But
But,
I
does that
think,
make sense?
yeah, it's just all a lot and confusing. I'm just not, like, I've learned enough about it too, but it's also like a lot, like, but right, if it's 100-gallon tank, right, I think, or is it 1,000-gallon for 3 bedrooms? What's the normal?
I think it's about 1,000.
1,000 for 3 bedrooms, and then, or so say it's 900 gallons for, and that's 2 bedrooms, and they wanted for 3 bedrooms. It wouldn't have to get perk and permitted again in order for the extra field lines to be there.
Well, the state could do a re-inspection and look at the land and modify it.
Yeah.
They could do a modification to the permit, or you could expand the drain lines. If the state does come out and say, we can't modify this permit unless you expand the drain lines, then you would have to go that route.
Okay.
But the next step I would say would be, and if you want the link, I can send you the link to have them go on and request a modification permit or a re-inspection.
Okay.
Yeah, I just got one this morning too, because I have a listing coming up, so I already went in to do due diligence. But they can come out, which I'll recommend when I go to the listing appointment.
Yeah.
Be like, hey, just to have it, because that's more incentive. It's going to cost more time and money
Right.
for the buyer to have to go
Right.
do that instead of just doing $200 up front and be like, we've got this, here's your permit.
Yeah.
There you
The
go,
other
buy
thing
it.
is that, so I've talked to an attorney about this, you can list a home with it being with it parked for a different amount of
Yeah.
bedrooms. You can advertise for it as a 5-bedroom home, but you have to
To
put
disclose.
Yes, you have to put
I
in the
have.
public remarks, this home is only parked for a 3-bedroom, but it is a 5-bedroom home.
Mm-hmm.
As long as you disclose, they can't get you for any sort of
Right.
advertising, they
Absolutely,
can't get you for anything like that. But you can advertise for it as is without any modifications, and you can use a higher amount to publish it as long as you disclaim.
Good. Glad we solved that. We really don't hear much about the septic stuff on our side, but
I guess that's the question, like, what does it do for you as the lender?
It doesn't.
It
much.
doesn't, you don't need that, right?
usually, the time when underwriting has questions or needs whatever is when there's mention of it in the contract, and so hey, we need
Yeah.
we require whatever like termite. We're talking about it today. We don't need generally we don't need termite inspections unless it's a VA loan
Correct.
or unless the appraiser notes evidence of activity. But if the contract says the termite's required, then the underwriter's going to say, okay, we need that for the file because it's required. So stuff like that.
I had a question.
Yeah.
When we're sending you like our contract initially, what all do you want? Do you want like just the purchase sale agreement and counters? Do you want confirmation of all of our documents to be sent to you, or just?
Yeah, just the purchase and sale, and then any counters or amendments. Yeah.
What about your compensation agreements, if there's 2%?
Well, I'll chime in there.
Please do.
THGA does require those documents now when you submit the file to them.
As far as confirmation of agency, property conditions.
Yeah, all of them, all those. Yeah, they just added it. But if you guys send extra stuff to us, I'm just gonna file it away until I need it.
Hey, by the way, too, on THDA, I had a call yesterday from a client. Got pre-approved at Eastman, first-time home buyers program. Anyone want to guess what the rate is right now? 8.
What?
Yeah. Yeah. THDA yesterday lowered the rate on, and this is without being homeownership heroes. If you're a firefighter, police officer, paramedic, active military, you get a 0.5 point reduction.
Teachers still too.
No, I don't think on THDA. Yeah.
What about nurses?
No.
No.
about
Dumb. So dumb.
What was that? Corrections? I don't know about. I don't think. In the Mayflower, what did you say?
What about
Highway
realtors?
truck drivers.
Highway truck drivers? No, denied. Everyone's denied. It's 6.5% for non-home, so, yes, you've got some PMI perhaps or whatever, but if you were to stack up that payment, relative speaking, it's a great deal for a first-time home buyer. So. You can stop now.
I'm just
Yeah.
turning it on when
Do you want me to turn this on?
So what were we just talking about?